Happy Sunday is that time of the week where we go over the watch list and I can show you what I'm looking at and why. So we're going to focus mainly on euro dollar. So you can see here is the watch list. We've got euro pound, we've got gold, we've got dollar yen, we've got dollar CAD, and we've got New Zealand dollar. So as I said, let's first start on euro dollar because there's quite a lot to go on here, or quite a lot going on here that I want to break down for you. So essentially what we've got is the retail market heavily buying euro dollar. So if I pull up this chart, this is euro dollar on the daily using a Bollinger Band. Now, I'm not going to go over what that is too much, but essentially it just gives us the average price of euro dollar over the past 200 days, very similar to a moving average. And typically when we break out of here, we can start looking for buys to the downside. Obviously, we break to the downside, we can look for buys. We break to the upside, we look for sells. That's just a general rule. Obviously, that's not always the case. And this is one of those exceptions where we've got euro dollar extremely oversold, quote unquote oversold. And now what we're seeing is if we pull up the DXM or retail sentiment, we can see we've got 82% of retail traders currently long on euro dollar. And we can see these long positions just aren't shifting. So if we look back in time, we've got euro dollar long since 27th of October. I can't really see further back than that, but that's pretty telling sign that the majority of retail are currently counter trend trading this. Now, if we look here, this is the COT data. Let me just move my camera for a second so you can see me. Let me put it up here. So you can see the data. If we look at euro down here, the very last one, what we can see is we look at these columns, we've got their long contracts have decreased by 5,600. Now, this isn't the exact number. I think it's actually in the millions or the tens of thousands or something. But, still, the point is they've reduced their long contracts quite significantly. Now, if we look at the next column, we've got short contracts here. We've got 29,000 short contracts added. And if we look at the net change, we can see there's almost a 5% increase in short positions. Essentially net positioning, they are very, very bearish at negative 42,500 total positions. So essentially what I'm trying to explain to you is why would we go and why would we go and buy euro dollar when the smart money, the real market movers are currently selling this market? Well, you wouldn't really want to go long. I've just showed you that dumb money is going long, smart money is going short. So we obviously follow the smart money. Now, this is the most recent data for the euro. You can see we had French flash manufacturing PMI and we had German flash manufacturing PMI. So what this means, I'm not going to go into what PMI is and all the details. You can obviously just Google that. But what we're seeing really is a slowing economy within the Eurozone, obviously France and Germany, with an increase in the likelihood that the ECB is going to have to intervene. Or not intervene in terms of, not like the MOF with the yen, but intervene in terms of a monetary policy action. So it's not looking good for the euro on a data basis. It's not looking good for the euro in terms of the central banks, especially against the dollar, where, if we look at what the dollar's done recently, we've just broken out of this really strong psychological level and key level of 107. So you can see we didn't break above that or haven't broken above that since October 2023. So essentially, the next target I'm looking at now is 110 within the dollar. We may see obviously pullbacks and slight fluctuations in between now and 110, but my overall target is now at $110. The euro is still dropping. So if we look at the euro index here, look at this drop. This is the daily time frame. Keep in mind, we're just seeing it just waterfall to the downside. And essentially, this is free money. So you can see here, this is my MetaTrader on Eurodollar. You can see how heavily I've been short in this market recently, and my bias hasn't changed. So you can see even just scalps, day trades, DCA positions, I am milking Eurodollar for everything I can. And I'm going to continue to do that. And I think that it's probably the wisest decision you could go for at the moment. The euro is very weak. There is nothing really to support it, especially if we look at what's coming or what's forecasted. It's not looking good. So in terms of what we're really looking for in terms of targets on euro dollar, it's now really a case of can we come down to parity? And parity is essentially just this one level. So when euro dollar reaches parity, what that means is the euro, 1 euro is equal to $1. And that's normally a bad sign. So you can see last time we came down to parity, we actually reached a low of sort of 0.95, and then we rejected that very heavily and broke back above parity and sort of stabilized a little bit. So are we going to see a very similar thing where we end up breaking down maybe even to the 0.95 level, and then start to see a correction as the market or as the economics start to develop. We'll see. But yeah, parity is sort of the first level, well, the next level in my eyes that I'm paying attention to. So next up, we have got the New Zealand dollar. Now, the New Zealand dollar, or New Zealand dollar against the US dollar, but the New Zealand dollar is currently under a little bit of pressure from the central bank side of things. We've had a 50 basis point cut in October. So essentially, we're just trading that central bank divergence. Obviously, we've got a very strong dollar. We've got a relatively hawkish Fed, and very good data for the UK, and essentially the opposite for the New Zealand dollar. Now, the New Zealand dollar isn't even close to being as weak as the euro, but it's still something we can capitalize on. So what I'm looking for really is just any type of pullback. You can see I've got two levels drawn up here with two possible entry points. Now, we are actually already short on the New Zealand dollar. So you can see on the screen, this is a signal that was sent to our Discord. So you can see the full signal here. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So by the way, if you want to get the signals, you can click the link in the description. You currently have 50% off for Black Friday. So we are looking to continue this momentum. You can see a very clear trend in what I'm looking at: euro dollar shorts, New Zealand dollar shorts, and so on. Australian dollar shorts, pound dollar shorts. Everything is long dollar at the moment. It's the dollar season. So we're looking really to, well, I'm looking to scale into these positions here. So whether we can get a lower entry, higher entry, doesn't matter. Overall, still very bearish on this market. So let's just slightly move away from the dollar. Let's have a look at euro pound. So what we're seeing is a relatively stable pound. Now, it's not anything close to the dollar. It's not like a powerhouse or anything. It's just a relatively stable currency at the moment. And that's really going from the Bank of England's policy. Now, again, if we look at what the euro is doing, well, the euro is really underperforming at the moment. So we're looking really to go short. We're playing on the resilience of the pound, or the stableness of the pound, against a weaker euro. Now, there isn't too much room for this market to go down in the near term. So if we have a look on our daily time frame here, you can see our first sort of targets are actually pretty close, and we are already seeing rejections around here. But if we scroll down a little bit and zoom out, we do have a much larger potential target down here at the 0.07 level. The problem is with the euro pound market is the technicals are very messy. So if we look at really what's going on the daily, there's not much here to be able to trade from. It's very difficult to get a solid entry because it's a very noisy and very choppy market. However, we can see a very clean entry, maybe a double top from this previous high from October or start of November. That would be a great entry, or if we can just see any type of pullback, would be great. But yeah, actually trying to plan an entry on this market can be very, very challenging, which is why I don't have much marked up. Now, moving on to gold. I mean, you can already see it on the screen, but this one is very simple. We're looking to buy gold again. Now, there's nothing immediate that screams buy gold other than the things that have already existed. You know, the things that have already driven this market higher this year. We did see the drop as we saw the dollar strength, we saw profit taking, and we saw a more hawkish Fed, although that's clearly not really been much of an issue for the bulls in the long term. So gold remains a prime hedge against risk aversion and currency debasement, especially with the Fed's current rate cutting cycle in progress. Alleviated geopolitical risks and recession fears underpin gold demand. So essentially what we're seeing is the escalations between Ukraine and Russia. Obviously, Russia is starting to sound a little bit more dangerous with their nuclear talk. Now, whether that will actually happen, I don't know. I'm not here to sort of think about that too much. But obviously, we do know that Ukraine has now got US missiles, as far as I'm aware, which again is provoking Russia. Now, what we're seeing is things in the Middle East aren't necessarily escalating, but they are still present. And again, that's driving some capital inflow into risk-off assets such as gold. So I'm looking to capitalize on, you know, the overall trend of gold. I'm not looking to really sell this market at the moment. So what I'm looking for is, obviously, during this dip to the downside, we saw the EMAs cross to bearish. Now I'm looking for this cross back to bullish, and you can see I'm waiting for a pullback. So when we have these EMAs look something like this, where we get this cross, price typically comes back down to retest this level and then continues in its direction. So that's basically the plan. It's very, very simple. It's just buying the trend, buying dips, etc., and just capitalizing on the overall flow of gold. So that's about it. There's nothing else really on my watch list this week. It's essentially capitalizing on the euro weakness, capitalizing on the dollar strength, and possibly even just the pound stableness, if you will. So guys, that's about it for this week. I hope you all have a great trading week ahead of you. Please like and subscribe. Obviously, as I said earlier, if you want to join the Discord, get some education and signals, link is in the description. It's currently 50% off. That won't last much longer. So yeah, see you later. Have a good Sunday.